Okay, so I've just analysed this on your chart here, yeah? On my chart, but I'll do it the same for you. Trend line drawing, top of the swing, double click. There's your crossover, yeah? There's your crossover. Now, I want you to understand this. In real time, the exchange, it will be further down here in real time. But then, as price adjusts, the exchange will adjust further up. Does that make sense? So as you're watching real time, it tells you where the market's going. And this will move, this golden line here will move up with price as the red moves down, because it's going to adjust with price. Does that make sense? Because it's adjusting for the money coming in the market and the money going out of the market. So it's showing us where the amount of money will go to. So it's going to adjust. If that adjusts in real time, imagine you've got two pieces of string. If them two adjust in real time, these two are going to adjust. Does that make sense? Because they're just two pieces of string. So anyway, we pulled through. We knew the market was going to this area here. Sorry, guys. We knew it was coming in here. There's your. So we come down. We knew the market's turning around there. Agreed. Right. We've had another crossover there, Julian. Come to the bottom of it.
Yeah.
Pull your no different than a measuring stick. Let's not get too complicated here.
Yeah. Pull that through it. Yeah.
Don't think that simplicity is stupid. It takes. I'm not saying I'm a genius. Please don't think I'm saying that. But it takes a genius to make something that everyone makes so complicated real simple. It makes sense.
Yeah, Dale, you know where you're grabbing that line through the bottom of that point here. Oh,
yeah,
a minute. This point at the bottom, and you're pulling it up this way. Then this is where the market's going to, isn't it?
Yes.
Top point. So I should really get out of that trade.
Yeah, but okay. Well, just let me understand. I want to. Listen, it's perfect. This I like doing this when I'm live. So we know the market's going to the upside. Agreed. Yeah. The market's going to the upside. Now, the market, before it goes to the upside, and this is what a lot of people don't understand, before it goes to where it's going, even if you had a crystal ball, which trust me, with this indicator, you've got a crystal ball, it may come down here, Julian. Before, like I've just drawn on my chart.
Well, Dale, that's what I was thinking, cyclicity.
Yeah.
Is that in a cycle? Cycle
right.
one,
So
cycle two.
You know where the market's going here? You can read the market, you get that. Cyclicity. That's a phase one, do you agree?
Yeah.
Okay. Then the market's pulled back here. It hasn't even really pulled back. It's actually in a range, Julie. Okay.
Right.
The market's actually in a range. Yeah. Or you can put all the sexy words you want on them. Consolidating, in a range, sideways market, whatever. It's consolidating. There it is. It's within that range there. Agreed?
So it doesn't know which way to go at the moment.
No, it's basically shut up. Cheers, Andrew. It'll clear some of the money out the market. There's indecision there. A load of dumb money will come in. Okay. Dumb money will come in here. Okay. There'll be some entries. It'll get took down to the low side. What you've done, and I want you to know, whether it's by mistake or advanced or whatever, it's super advanced stuff. But people do trade like this, right? So they'll then drop down to the 4-hour trade, Ewan. Yeah?
Yeah.
They'll then drop down to your 4-hour trade. They'll go, right, the market is consolidating at the moment. There is that range what I've just marked for you. Agreed?
Yes.
Right. You got in the trade, I think, as I analysed it, on the 4-hour chart, stop loss, entry. Have you got in on this bar?
Yeah, I believe so, yeah.
Yeah, that 5 pips above it.
Yeah.
Probably a bit below it, maybe. Okay. I just need to know where you're entering, Julian, for the simple reason is That's
You know
fine.
what? It was over 2 days I put it on. So
Say again?
it was 2 days ago I put it on.
1, 2, 3, 4. So we'd be here, wouldn't we? 1, 2 there. You'd be on that bar there. Okay, understood. So, and you entered on the 4-hour chart, am I right?
So I entered it on the, well, how come it only shows on my day one chart?
It done. It shows on every chart you'll go on, Dewey. So if this is your daily chart,
yes,
if we look, and this is why, even if people are earning money, and understand this, if you're going to trade people's money, Julian, yeah, and we sit down with a prop house, or we sit down with, listen, you're never going to show. If I was trading your money, I would never show, well, this is how I trade. These are the trades you're getting in on this bar. This is what I'm doing. You're never going to show that. But if you're going to sit down with, say, a prop house and you want them to say, fund you, just go with me, or 100 grand, they're going to say, right, analyze your trade. So what I'm doing now is going, right, this is a winning trade, but where is it a winning trade? And how is it a winning trade? Where have you entered on the daily here? Because this part, the entry point, the entry point shows me like you bought at market and you put a stop loss at the high of that bar.
Yeah.
Because I can't see you're not 5 pips below the bar.
Yeah.
You're not 5 pips below that. So you're gambling. So if you gamble and win, this is where it gets in the way, Julian, is if you gamble and win on this trade, right, you're winning. Your brain's telling you you've done something right. Your brain says, oh, this is good.
Well, no, I wouldn't say that I think I've done something right. I put on several trades that were to get the hang of it. So what you're telling to me now is obviously I've done something, but it's a fluke.
Honesty is the best policy, pal.
Yeah, no, I've got nothing to hide. I'm starting to get. I'm starting.
So if what I'd have said, I thought like you'd have entered on the high of this bar. That's what I was analysing before, because I thought you'd got it on the high of the bar on the 4 hour and scaled in. I'd read it how I would trade it without actually coming to your chart. So if you'd have gotten on this bar, I'd have said, okay, that's a good trade because you're getting in 5 pips above the bar. Julian, does that make sense?
Yeah, I'm with you. Yep.
Getting in 5 pips above it, 5 pips below it, cool, because you're inside the range. And if the market comes down, great, you're protected. But it's not. We're not in it there. I hope that we're analysing it right here for you now. So this trade, you've got in here. Okay, that's where your stop is. Come up, so in, so forth. You're kind of at the top of the range anyway on the 4 hour, aren't you? Can you see what I'm saying? Does it make sense where you can see the range on the 4 hour time frame?
Where they're all at the top.
That's the range, isn't it?
Mm.
And what's interesting for us to see here is now at this point, traders will have a buy stop here. Do you see how it's just broke the range by 1 pip?
Yeah.
Well, I hadn't even broke the range by 1 pip. Price will come down, a big seller's bar, it'll touch it, and you'll think it's falling through the floor. Yeah? And people will buy and they'll pound in the market there. Sorry, they'll pound in the market to sell. Only for this to happen. Nope.
For it to bounce back up.
Yeah. Yeah. You know.
So okay, so I spent ages putting them on.
Okay, it's fine. This is the learning curve. That's great.
Yeah, it definitely is a learning curve. So did I put the trade on right, as in the stop loss that's a 2-to-1?
So let's look at the pros. By the way, we've got to spill milk to make it. So 41.8. Yeah, perfect. So you've got a 2-to-1 risk reward. You've analysed the trade perfect there. Yeah. So you're in a 2-to-1. Your risk reward is in line. Let's say this, Julian. Let's say you was just entering the market and just putting trades on now and just being a bit risky, yeah? the worst thing you're going to do is lose 0.2% of your account at this point. Does that make sense?
Which is my risk management. You told me yeah.
Yeah, the money's made in your risk management, as you know, Julian. Makes sense.
This is fantastic news that I've managed to get my head around that.
Yeah, that's great. That's great. That's accelerated learning. That's what you want. So just look at these pullbacks here. What you're looking. When people will see this, this is instantly what they'll do. So I'll show this because it's good. We're in a live trade. So drop down to the 1 hour.
Yep.
Yeah. Yes, you see this big drop here?
Yeah, that I'm in at the moment.
The one that you're in at the moment, yeah. This one here, it's pulling down. They'll just analyze it all the way down. So we've seen how it's dropped off the face of the, let's say the face of the earth. Yeah?
Yeah.
Next bar's gone here. Okay, that's a 30-minute, yeah?
So it's dropping, isn't it?
Let me show you. You're going to catch it, and they'll drop down to catch it. People will be on this bar here now. Do you see this one?
Yeah.
Yeah? They'll be going, they won't be doing it because they ain't got this, but they'll be going like that. You'll be double clicking. The market's come down into this area. Insert.
Oh man, it takes ages to clear all these things up once you put on it.
Oh, you'll soon fly through it. Yeah. The market's in there. That might seem a lot on this chart. It'll be maximum 6 pips. You've got 10 pips there. Okay. And that's a reversal if you're going with it. And then they'll drop down to the 1 minute. This is people who trade lower term time frames.
Scalping.
Okay? And you see how it's just been slightly ranging this area?
Yeah.
You know, you're thinking it's dropping down, scaling right down through them time frames there. Yeah. And that's how people will analyze, right? Where's me getting here? You know, and scalpers will take them. They'll take that, dropped it, you know, they'll take them quick, 10 pips there, 14 pips out. Not for me, but that's how they'll trade it. Yeah. And now they know that's in a range there. When I said dropping down through the lower time frames, now they know that's the bottom of the range. That bar, that low test bar, do you see it?
Yes. Yeah.
Hit it, come up. That was the entry. That bar there was the entry. If you want to trade on the lower time frames, half of that would be 2.15. Just broke it there. Use the exchange indicator. Wallet, come up, touch you. That bar was your entry. Great stuff. Use that bar as a stop loss.
So what, that bar was the entry into my trade?
No, that bar was the entry if you're going to trade the reversal going back up.
Okay, right.
Real time. This is real time. I'm analysing it real time for you.
Yeah. Okay. So that
your entry was there.
Yeah.
What you're saying to the market is if you enter. Come on, Dale. If you break that bar, take me in, and you had a stop loss there. Now, what you would do is put 2 times the ATR there, average true range. So the indicator you would put on, insert indicators, trend, average true range. Is it Bill Williams? Average true range, bump. Okay, so this, I'm just going to explain what this does. It's an ATR, which is the ATR stands for the average true range, and the 14 is of the last 14 bars. 1, 2, 3. Let's just use a crosshair there, might be a bit here. So the last 14 bars, what this indicator does is mathematically add all them up and tell you what the average true range is, meaning the range of each bar. Make sense? So what you can then do as a stop loss management is see what the average true range is, and the average range, as you can see over there, says 7. Do you see it?
Yeah.
That means 7 pips. So instead of, squeeze them down, double click, instead of there being a 9.8 stop loss, go 2.5 as the average true range. So it was 7, so you'd go 14, 15, 17.5 pips. Move it to 17.5 pips. Yeah. There is your entry. Stop loss is 17.5 pips. And now you're using an ATR stop loss. Does that make sense?
Advanced, but sort of
super advanced, but you'll be able to come back. You'll be able to come back and watch it. So what you've got at the moment, Julian, is you've got a trade going to the low side, haven't you?
Yeah.
You've got a trade going to the low side. This is why people in the market, things can be so. Things can be. It's what's the saying? Say vision. When the eye is focused beyond more what the eye can see. Does that make sense here? When the eye is focused on more what the eye can see. So you're trading it to the low side on a pullback for the 4 hour or the daily, where I've just scaled down to a 1 minute chart to take a trade to the upside. Now, if you'd have only traded that on that one bar there, remember I've just used here the exchange indicator and the volatility. Agreed? And just took you 12.5 pips while we've been talking, which is a 1-to-1 risk reward while we've been talking for the last 2 minutes. And I've scaled that down from a trade you're going in the opposite way. You know? So that's just what I'm sure. That's knowing what range you're in, knowing where it's gone to, knowing where the market's at. Simple as that. Is that okay?
I wouldn't be able to get the trade in quick enough before I work everything.
No, Julian. Some people, as I've spoke to Steve, and Steve's fully aware of it, some people like to trade the lower time frames. Yeah? People like yourself and Stanley and other people and whoever it may be, myself, go and only trade on the daily time frames. So now we're talking about them trades. Well, my trades are daily time frames. If you were trading the one and the 1 minute, the 5 minute, the 15 minute, you're trading it on in real time, and you're sat here getting into these trades. Now this one, okay, I'm not just a bit of gloating here. That one's gone. It's ran off. It's give us the return that we want. Honest to God, on this trade, you might take 3 losers, but the one winner you get will go for you. Does that make sense to you?
Yeah.
But we're not here. I'm not here to give it pros or give it cons. I'm just saying this is how you do what you do. Make sense?
Yeah. Yeah.
Awesome.
It's definitely a lot more clearer from when I first started. It's getting
that's cool. That's cool.
Getting an understanding of it.
So do you understand what I was saying before to you guys about? Let me clear these charts up, guys. I don't want Julian giving me a load of stick because I've dirtied these charts up.
That's okay. I can do this.
I want to explain it. How I said to you before, where the market will come down, it'll touch the range, yeah, and then it'll take it right back up because there'll be a load of sellers that come in here.
So really,
this is on a 4 hour time frame.
So really, this is the best time to get out of that trade now.
Yeah, because we've got to look at it, see what everyone else sees, but do what nobody else does. That's how you become great at stuff. No, don't get out. Don't just jump out because of me. Chill out, dude.
I thought you said no. That's fine because I'm going to reset the trade again once I get off here in the right direction.
No, the trade of this. So, listen, the decision you're making there is great, by the way. Let me make this, and this will take you years to understand. If you've made a wrong decision in trading, kill it. Done. Because it's allowed to happen. But don't think, because your brain will do this. Brains do this to us, the fuckers. They tell us, they lie to us. They start telling us the wrong information. Oh, the market will turn, it'll go for me. This will win, this will go in my direction. And don't do wishful thinking. Do what you know. Do what you're meant to do. Make sense?
Yeah, it's just getting getting that understanding of it.
Okay, well, you've got it. Listen, that's fine. Let me just tidy these up here now, so I can go back to where we started and what we're looking for. So the trade here on the daily time frame is this, Julian. If you break the high, take me in. Stop loss, lower the bar.
Yeah.
If it doesn't enter next day or tonight, you're trading time frames. Like you said, you're at work, no problem. You're trading daily time frames. Stop loss, higher the bar. Sorry, entry, higher the bar. Stop loss, lower the bar.
Yeah, on that one. And then we're waiting for it to bounce back up, catapult off.
Yeah, take me in. Boom. Done. That's all we're waiting for.
And it should be going. It's going to go in the range of this bar here that you've pulled through.
This is what we're not hoping. This is the law of probability. What's going to happen, isn't it? Make sense? That's why we trade, isn't it? You know, I haven't got a magic wand, but I've got the best thing, and it's called the exchange indicator. A little measuring stick. Put it on there. Tell you where the market's going to. Great stuff. This is where you get real confident now. And even slightly cocky, Julian, because you're like, well, we kind of know where you're going, mate. So I'm just waiting for you to make your move. That's why with the power of this, if you've got the patience to get down to sit in the 1 minute charts, got the patience, you're waiting for that. Break me here and take me in. Yeah. Now, this just gets to show you real time. You've got a pullback. It's no different than a pullback on a 1 minute chart. Yeah. Price is going to pull you back. We're aware of that. We're aware of it. Price show me up here to pull back. When it pulls back again, bang, take me in. 1 minute charts, 5 minute
I'm with you. I'm with you.
charts, 30-minute charts. You're trading them quicker, more relentlessly, but no different than you would trade it on a monthly chart, weekly chart, 4-hour chart. Does that make sense?
Yeah, so when you put your trade on with the daily chart, wherever it's gone, that trade could be running for a few days before it took the profit.
Yeah, if you're going for a 2-to-1. So let's say, for instance, you entered on the high of this bar. Let's use this. This is the trade that we want. Yeah. You said to this trade, if you break the high of this bar, this was the trade. If you break the high of this bar, yeah.
So that would be the perfect bar to get in on.
Yeah. If you break the high of that bar, take me in. It's took you in. You've got a bit restless because you're like, oh, it's boring this. You know, it's not doing what I want it to do. And you trade. Sorry, guys. Come on. You trade, you take profit is here. Yeah, that's your take profit. Don't get restless. Yeah, that's the trade. You analysed it. You knew where the market was going to. You've entered on the. That's it. Leave it, Stanley. You've entered. Understood? That's you, Julie. Just leave her. Just let her go.
And then you sit back and wait for that return to come in.
Yeah, that's it. It's no different than putting your men on a job, investing the money into it, and letting the job play out. If the job goes well, great. If the job don't go well, it won't. But the law of probability, is 86% of the jobs you'll do will be crackers. You're going to have some crap jobs, but I'm sure you have crap jobs at work. Make sense?
Yeah, makes sense, yeah.
Cool. The entry, what me and Julian was just talking about there, is what Julian's done there is a bit of a hybrid, which what he's doing, hybrid, is call it a mix of strategy, but it's a hybrid. His entry and his exit and his stop losses are based off the D1, but he's using the exchanging the volatility. Make sense?
Right. Yeah. Yeah.
That's all. To be honest, exactly the same strategy I trade daily.
Right. Fair dues.
Whether it's on a 4 hour, I'm still trading. I'm still entering 5 pips above the bar, 5 pips below the bar. And I want you to know why we're entering 5 pips above and 5 pips below, just for clarity, is that the spread. Share screen, Dale. Let's rock and roll. 2 seconds, Steve.
Yeah.
The reason we're entering 5 pips above the bar, what was that? Euro USD. We was on with Julian there, yeah. Right. The reason we're entering, let me smarten my charts up here so you understand. That was a great trade that you shared with us there, Julian, because as you can see, as I was just explaining, you know, the market's gone up 34 pips there, just bouncing within that range. You see it, my friend. The reason we enter 5 pips above the bar and 5 pips below the bar, or even if you're breaking of the range, understand this. Let's say that's the range that we're trading, yeah? And you're trading a breakout, whether it be a breakout of that bar or a breakout of the range. Cheers, Andrew. You're saying 5 pips above the range or the bar and 5 pips above and 5 pips below. For the simple reason is what the market will do, it'll come down, it'll dip its toe, fuel you, and then go back round and go up. The market didn't get to there. The broker got to there. Does that make sense to you? So the broker is saying to me, Dale, if you want to play games on my platform, for every time you enter the market, I'm charging you 1.4 pips. And I'm like, okay, I'm cool with that. So is 1.4 pips are inside. Sorry, there's a range. See it? Is 1.4 pips didn't break the range. Does it make sense? Yeah. So when you're selling, price follows you in. Yeah. You call the money between the bid and the ask. Yeah. So the market's bidding 100. So the market's bidding 100, but the broker's asking 101.4. So I've got to pay in before I play. Make sense, guys? So what we do, the reason we go 5 pips above the bar and 5 pips below the bar, excuse me, having food, Andrew and B, before we do a webinar is not the way forward. The reason we go 5 pips above and 5 pips below is because what we're saying is the market has actually broke the bar. Make sense? With the cost of the spread. Is that clear? I know it seems a bit confusing, but basically we've got to pay the broker before we get in. It's no difference. It's like getting on the bus and paying the bus fare. Yeah. So to break the top of the bar, the market has to go that bit further. Is that clear? It'll sink in. I remember when I first got taught it, I was sat in the room. There was 20 of us, and George explained it. I said, "Don't make sense. Say it again. Don't get it. Say it again." He didn't understand it, because if he understood it, he'd have been able to explain it to me. I said, "Don't get it. Say it again." So I'll say it again. When the market comes to this level, so if that price comes up now and it goes and it stops there, it's not there. It's actually there. Who is there is the broker and his money. So what I'm saying is, break me by 5 pips, because when price gets to there, the market has been there. Make sense?
Yeah.
Does that make sense? Yeah. So when the bar comes up and it goes like that, cheers. When the bar comes up and it goes like that, you think the market's there. It's not. The broker's got his spread on there. The market gets there when that happens. So that's why we go 5 pips above the bar, 5 pips below the bar. Cool?
Yeah.
Okay. I just wanted to share that one with you there. Another one, this is great, we're time's up, but another one what I want to share with you is this, is in the UK, they've cut leverage to 6 times your account size. Now, leverage used to be up to 500 to 1, which means this. If I had £100 in my account, I actually had, Dale, do some maths. Why is your head gone? I actually had 5 grand in my account because I had 500 to 1 leverage. Now, remember the numbers, because you've got to be real good at numbers. Not really good, you just got to get them. Yeah? 90% of the market loses money, or 87%, which means 90% of traders lose 90% of the money in 90 days. It's because they come into the market, they gamble, they don't know what they're doing, and they lose it. It's called dumb money. That's why there's $5.4 trillion traded each every day on the Forex market. 20% of them account for retail traders, 80% of them are commercial traders. 20% of the 5.4 trillion is 1.08 trillion. If 90% of the 1.08 trillion loses the money, that means each day 972 billion pounds is taken off retail traders like Stanley, Mitchell, Steve, Julian, Dale, Lucas, Andrew, takes it off us. It's called dumb money. So what the authorities have said, because they're not making any money on the market, they're not taxing anyone, is, well, we've had to cut leverage. So they've cut leverage so that the dumb money is safe. Completely stupid. Anyway, they've done what they've done. For good traders like you, for in-the-know traders like you that are coming in and educating themselves and not gambling in the market, is there other jurisdictions that haven't capped leverage, where you can still get your 500 to 1 leverage, where you can still go and get that funds? Yes, there is. Australia, Dubai, no problem. Do we have brokers in Australia? Vantage. Do we have one in New Zealand? Yes, we do. It's Black Bull Markets. No problem. Just letting you know, I'm giving you the resource that's what the UK has done. So if you go onto your account and you're with FX Pro and you think, Dale, I can't get these trades on, it won't let me put a trade on anymore. It's because you're going to have to make the gap up. Does that make sense to you? You're going to have to make the gap of the money where you used to put the leverage on. Okay, so the reason you can earn the returns you earn in trading is because of leverage. So if you have a £5,000 account, in theory, if you have a £5,000 account, in theory, with 500 to 1 leverage, you've actually got 5 million quid in your account. Is that right? 5,000. So you've actually got £500,000 in your account. All right, Dale? Yeah. So if you've got an account that's 5 grand, it's actually 500,000. So you could actually put a trade on. Understand this? You could put that £5,000 on a trade, and you'd be £5,000 a pip. If the market didn't go down 1 pip and it just shot up 10 pips, you're going to make yourself 50 grand. Does that make sense? Yeah, so that's where people was gambling. They didn't understand leverage. What I'm teaching you is only trade 2% of your account. Make sure that the money's earned with the risk management. Yes. People was going on thinking, what? So I've got the weight of £500,000 quid with 5 grand in my account. Honest. Yeah. So these brokers from Cyprus, these brokers from Malta were saying, yeah, you can do this, 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 and this. Dumb money was coming in, only seeing in the green, not seeing the red, and losing accounts that quick. You aren't doing that. You've educated yourselves. But that's what's been going on. So that's why the UK has restricted it and the US have restricted it. Now, other brokers in other jurisdictions, I don't like in Cyprus, and what they will do is they'll ring Julian or Steve or Mitchell or Michael or Tony. They'll say, Tony, open an account here in Cyprus. It's perfectly legal. You can do it. You're a grown man. You can do it. Put 5 grand in there. You've got 500 to 1 leverage. You go and lose your money. you're not protected by the FCA, which is the Financial Conduct Authority. You're not protected by ISA, ASIC, which is the authority in Australia, and you're not protected by the SEC, the authority in America. They can ring into our countries, give you the trading account, you can borrow your money and party's over. The only place they can't do that is they can't ring into America and get an American citizen to No, it's still on. Still on for me. No problem. I'm just at the internet fell off. Yeah, so that's the state of play, guys. So what you're going to do, use traders in the know. Yes, you're going to move your account to on New Zealand. One year authority under the Financial Conduct Authority. So I'm just letting you know there. That's what they've done. I think they was it June, Andrew? I don't know, June or 25th of May. It was, yeah, 25th of May when they put this restriction in. No concerns. You just move with the tide. It's no different if you're working for someone and his work runs out with a company. Ditch that company and move on to the next one. It's as simple as that. Just informing you. Okay? Okay, I've run over there. 6 minutes of my such precious time. I don't know what I'll do with it. Maybe I'll have to speak to Tony Wall when he comes up shortly, because he's on his way up to mine to pick his Freedom Trader program up. So Tony, you'll see Tony in the Facebook group. So make sure we're giving him any support he needs. He's new to trading, friend of mine, grown up with him since we was 10, 11. So great to have him on board. Make him feel welcome. Enjoy the rest of your evening, gents. Julian, great trading. We're still on there on that Euro USD trade, Julian. Is my screen still shared? Can you see my chart, Andrew? Just so you can see that chart, that trade that was on there. Drop down to that 1 minute chart while we was on. I was explaining that to you. There was the entry, Julian, what we was on about.
Yeah, and it's shot up.
Yeah, there you go. So stalking and sit there and getting it, that's trading, you know. We're not making this stuff up. It's not pretend. This is it. So, you know, cool, there you go. And what you would do there, I'm going to let you know now. There's the bottom of the swing. Let me just show you. Double click. Move the screen along. There's a crossover. And you're saying that's where price has gone to. Yeah? All you do is you manage the crossover. You manage the swing because it's in real time. You're still going to stay in that trade and just keep riding the wave as it goes. Does that make sense?
Just keep lifting your take profit.
Just keep moving the bar up, Julian.
Just
as
the
wave moves,
yeah.
Follow it with your stick.
Got you.
Because this indicator here, it's telling us it's flat. The money's still in the market. If we start to get a move like this, and it breaks your halfway point, oops, truth, and it breaks your halfway point, 2.15, breaks your halfway point, all right, cool, jump out there, get out there once it's broke it. Are you probably going to take a bit off the table and lose some of this? Yeah, but you stayed in the market in case it went like that. And
so that's where you've just got to keep riding the wave until it.
That's it. So it's no different on the daily. It's good to show you on the minute charts because all you're doing is riding the wave, because you know where the market's going to. You know it's going up.
Just a quick one. When you say they take the money out the market, I know this might sound thick, but where does that money go? Who's taking it out?
Well, people are either, remember, all the market does, it buys or sells.
Mm-hmm.
So at this point, if you get out of the market, what do you do with your position?
You're selling it back.
You're just selling it. So you bought your position here, Julian.
You brought down here.
You bought your position there.
Yeah.
You let them take your money up, and what you're saying is, I want to sell it. You're not saying give it me back. You're just saying, right, sell. That's all you're doing. You're buying and selling. you're buying a car for 400 and you're selling it for 800. You see how what we're on about here now? How are you just managing this?
Yeah.
That's just trade management. I don't care whether that's a minute chart or whether that's a daily chart. It's just simple trade management. Simple trade management. Simple trade management. The market's always going to pull back. If it just went up to the moon, there'd be no skill in it, would there? Make sense?
But the measuring tool, like you've put on the bottom down there and pulled through the crossover, has said that the market is going to that point there. So you know that's roughly where it's going to be.
That's right. That's right. Just keep measuring it as it goes up, measure it as it goes up. To be honest, at that point, if the market had hit it, listen, don't think you're a rock star or nothing, but you've just took a 59 pips. What was we? Did we say a 14 to 1? 14 pips because we went 4 times the ATR. 59 divided by 14. You've just took a 4.2% out the market. Done. Bang. And if you was just on the measure of that bar, which was, what was that? 9 pips. 59 divided by 9. Boom. You've just took 6.5% out the market. You might have got pipped here on the odd one. Yeah, because you'd have been 1 bar, 1 bar, 1 bar. All day. Done. So I hope that's a great resource for you. That will be great recording if you ever want to go back in that, because what we done there, we actually done time frame correlation from the daily time frame. Let me delete that. This will be great. Whoever wants to go back on this and watch it, whoever wants to get great resource from this and really explains time frame correlation is absolutely made up with this, because when we come on, what we was looking at on the Euro USD, was this. Oh no. We was in the range. We were saying we weren't too sure because the market hadn't shut whether it's going to be an inside bar and outside bar. It's still got a bit to go here. It was inside that range on the 4 hours as we were speaking to Julian. It shorted the market. I was saying to him, just come in and take your one-to-one trade. He closed the market out here. Bang, I said, what they do is tip in and fly up. It's gone up as we've been on 58 pips. That's trading. So if you ever want to watch an hour's worth of trading and suss it and just watch nothing else, you've just learned.